Hey guys, this is Karthikeya Kantwal from Apex FinServe and we're back with the daily dose of charts for the coming market session. But before we start discussing new trades for tomorrow's trading session, out of all the trades that we had discussed yesterday for today, we had three triggers: Just Dial, Apollo Hospitals and PEL. Just Dial hit the target. Apollo Hospitals did hit the target, but there's a it comes with a pinch of salt. And well, PEL closed in about 0.2% in the green, so we had a good green trading session, and I hope you guys did too. Now, the thing is, whenever we enter orders for the watch list, we enter them with a slight buffer amount in the trigger price. We use it, just to, well, first of all, avoid where you cannot be certain at any given point key your entire order will be filled at one exact price. So we put multiple order legs. What we recommend is you can use a 0.1 buffer in your trigger price. For example, if we consider the trade for today, SR Transfin, so it is buy above 730, so you can use a buffer of 0.1%, which would be about 0.7 rupees. So you can use it either as 730.7 or 729.3, depending on how conservative or how aggressive you want to be as a trader. We always take the buffer on the more aggressive side rather than the conservative side, because it's our analysis and we are pretty certain that it's going to go our way. So we had three triggers in all. Two met the target and one PEL closed about 0.2% in green. So those of you who say that well, Apollo Hospital wasn't triggered by 1 rupee, if you had used the 0.1% buffer, the buffer comes out to be about 1.5 1.6 rupees. Well, if you had used that, if you were as aggressive as us, you would have nailed that entry and the target would have been met. So you can practice it out for a couple of days if that suits your trading style, if that suits your taste and your risk appetite. You can try using that on a regular basis as well. Now, without wasting much time, let's move on to the charts that we have for tomorrow's trading session. Starting with the first one, SR Transfin. Now, SR Transfin, it has had a big voluminous sustainable up move, and well, if you look at it, it might show some resemblance of a bullish flag. So we're going to take a long position once the closest swing high is broken at 730. So we're going to be taking a long position above 730, stop loss going at 720, and the ideal targets at 1% from your point of entry. Now this is buy above 730, so again the SLM order type and not your standard bracket order affair. Coming on to the next one, Apollo Hospitals. Now Apollo Hospitals, again similar to SRT, we have had a big voluminous sustainable up move, but there's no retracement visible right now. So we'll wait for a slight pullback at 1620 levels, take a long position and then ride out the entire momentum. So we'll be taking a long position at 1620, stop loss going at 1600, and the ideal targets being 1% as usual. Moving on to the third script that we have, Just Dial. Now Just Dial, it has transitioned. If you go by the structure analysis, then it has transitioned from well, lower low, lower high into range bound markets. It went into range contraction, tried to break the range, and then well, once again it's right there. So we're going to be taking a short position at the upper ceiling of the range at 377, stop loss going at 381, and the ideal targets at 1%. Now this is being fairly conservative in Just Dial, so let's see how this goes tomorrow. Moving on to the next one that we have, PEL. PEL, we are going to be taking a long position. It has it has seen its fair share of a fall after this move was not sustained. We had a strong lower low, lower high formation. We are going to be taking a long position, betting on the pullback near a psychological support level of 1400. So we'll be taking long positions at 1400, stop loss at 1380, and ideal targets of 1% as usual. Moving on to the next one, IndusInd Bank. IndusInd Bank, again, we'd like to go with the simple concept of role reversal in this case. Broken out of the range that it was stuck in. Resistance has to act as support at this moment, so we'll be taking a long position at 535, stop loss going at 528, the ideal targets being 1%. Moving on to the final and the newest entrant, which was not well triggered today. So we are going to be going, in all honesty, we're going to be going very conservative here. We're going to be taking a long position at the only visible quality demand zone that we have, which is at 550, the ideal targets being 1%, and stop loss going at 543, 544, depending on your risk bearing capacity. Now these are all the trades that we had to discuss in the equity segment. Now moving on to the indices that we have, starting with, as usual, Nifty. Now the indices in particular, the analysis that we have been having, the biases that we have been having, all of them have been acting out very beautifully in this week. So we have had a good green, in fact very nice trading sessions on the indices this coming week. not coming week, running week rather, but we have had a good week. For tomorrow, I would personally like to see how this range plays out on Nifty between 11,180 and about 11,230 or 225 to 30. So that is roughly a 50-point range. Depending on the range, which side it breaks, I would like to enter with a target of the zone. If it's an upside break, target of about 50 points on the upside. If it's a downside break, target about 50 points on the downside. So let's see how that goes. Now, when we come to the option chain for the index, now there's some interesting thing to be noted about the option chain that we have here is, well, yeah, I hope you can see the option chain now. Now, on the call side of things, on the resistance side of things, number of contracts have been added. The call writers are pretty certain. They are not looking weak from any aspect. Whereas on the put side of things, the support side of things, the puts have been unwinded in a hefty amount in a hastily manner. It seems we have lost about 15 to 20% of all the contracts, and the total change in open interest is negative in almost every strike on the index. Now that is quite concerning because it goes negative as far as 600, 500, 600 points in the money. Let's see how that goes. Quite interesting as usual. It is expiry, so we don't exactly know until price action confirmation is there. But when we try to declare the support and resistance, as usual, we have immediate resistance at 11,300 with 2.3 million added contracts, which is massive. Important resistance at 11,500 with 5 million total standing contracts. Support side, we have 11,200. Now you might say almost a million contracts have been removed. Well, that's there. They have been removed, that's right. But even then, you have 2.4 million standing contracts there. So it is definitely an immediate level of support as per the option chain. For your significant support, you have 11,100 with 500,000 removed contracts, but 2.5 million still standing open interest. On the PCR, the option buyers are, they still seem to hold on to their bearish bias with PCR of volume coming out to about 0.96, which is in the proper bearish territory. So let's see how that goes. Coming back to the chart, I personally would like to think that this zone might break depending on how strong or how dull the opening is for the market tomorrow. This zone can break and you can immediately enter with, not immediately, again, don't take this as a call or something. This is just my analysis. So I can enter once this zone breaks. I can even enter on a upper zone rejection if the price opens there, and the target of the final zone at 11,100, 11,50 levels. Let's see how it plays out in the live market tomorrow. Depending on the first 20 to 30 minutes of price action, I will form my bias and then trade accordingly. Coming on to the next index that we have, the Bank Nifty index. Well, Bank Nifty and Nifty, as I said yesterday, they have not really been showing much confidence in each other. They have not been moving, in harmony, which is generally the case. Now, what we have in Bank Nifty, again, this scenario is similar to that what we have on Nifty. We'll be waiting for this again, as in the previous 3 days. Price has closed at the one of the zones itself near 2250 levels. So we'll wait as to how this zone reacts in the opening market tomorrow. First 20-30 minutes of price action, and then enter with a bias accordingly, either at 22,300 or 21,900, short or long respectively. Coming to the option chain for Bank Nifty. Well, Bank Nifty option chain is not as imbalanced on one side. There is no significant put unwinding or call unwinding or long build up, short build up. It's all pretty moderate. So we have immediate resistance at 22,200 with 100,000 added contracts. Significant resistance at 22,500 with 150,000 added contracts. On the support side of things, you have 21,900 with about 95,000 added contracts and 21,500 with 130,000 added contracts. Pretty moderate. There is no imbalance in the calls and the puts respectively. When we talk about the PCR for Bank Nifty using the option chain, PCR of volume, so that comes out to be about 0.95. So the option buyers, they still have a bearish stance. However, this stance is well reflected in the option writers mindset in Nifty, but not in Bank Nifty. Bank Nifty may there's no imbalance between the writers. So Bank Nifty may I would prefer going more through the price action side of things rather than heavily relying on the option chain because there's no clear indication. But in both the cases, I would personally prefer to wait out at least the first 30 to 40 minutes of price action. 9:15 so I don't like entering before 9:45 unless it's a very obvious trade. So especially in indexes or indices, I would like to wait out till 9:45 until the opening volatility has settled and there's a clear trend formation, and so that we can have a bias and trade accordingly. As usual, if you want any of these charts, be it the indices, the option channel analysis, or simply the watchlist trades in a written down formal manner, you can always check out the Telegram channel at the Apex FinServe. We are more than happy to share it every day before 9 a.m. before the market opens. So you can make full use of all of this content. Well, this is all that we had to discuss for today, guys. I hope you have a good, green, exciting expiry tomorrow, and I hope we do too. Let's see how the watchlist goes. I am particularly excited on how Nifty plays out, simply because of the sheer imbalance between the call writers and the put writers. So let's see how that goes. It is going to be an interesting day tomorrow for sure. I hope you guys have a green day as usual. As I said, thank you so much for watching. Have a good night. Bye.